Hey everybody, Brian Kutzu here with Fairway Independent Mortgage Corporation, based out of Fort Lauderdale, Florida, and Hendersonville, North Carolina. Coming to you today inside of our studio here in Fort Lauderdale. Not sure if you've ever seen it, but it's a great spot to shoot content. Wanted to go over some market updates, right? So today we're going to dive into some of the latest statistics that are going on in housing. We'll also tackle a couple of updates from the mortgage industry in general. There's some really, really neat changes as it relates to appraisals that I wanted to tell everybody about. And, one of the hot things right now, even though interest rates are still at levels that maybe people aren't interested in financing with, we're seeing a lot of people save big money on paying off debt and consolidating through cash out refinances and second mortgages. So we'll discuss some cool stories on that. The first thing I wanted to talk about is interest rates. Where are interest rates going? We're sitting here in November of 2024. There's a lot of anticipation regarding the election, right? Is the election going to cause interest rates to go up or down? I think the general sentiment inside of the mortgage industry is that we're going to see lower interest rates eventually. And the belief is that you're going to see lower interest rates in 2025. However, it's not going to be a straight line. There's a lot of geopolitical things going on around the world. And those things are affecting mortgage rates on a day-to-day basis. But I think overall, you're going to see lower mortgage rates, which, well, brings me to my next topic, and that's inventory, housing inventory. So I saw an article this week, which was really, really neat. Inventory is up in the state of Florida 9% compared to 2019 pre-pandemic levels, right? And it's interesting because in North Carolina, interestingly enough, inventory is down. There's 47% less housing inventory in North Carolina compared to pre-pandemic levels. So there's just not enough houses to go around. Like I said, in Florida, it's only up 9%. If you look at a year over year number, so if you look at 2023, September of 2023 compared to September of 2024, housing inventory is way up. In the state of North Carolina, it's up 48% year over year. So there is more housing available year over year. And in Florida, it's up 59% year over year. Now, remember, when I was talking about pre-pandemic levels, housing's actually in a tough spot. There's not a lot of inventory compared to prior to COVID. So it leads me to the discussion that I really think that buyers need to consider getting off the sideline before interest rates go down. Interest rates are the number one thing that is driving people into the housing market. They say for every 1% that interest rates go down, about 5 million more consumers will qualify for a mortgage for a home that they're looking to purchase. So if more people are eligible to purchase, then more people are going to buy, and that is going to drive more demand. And as you can see from the pre-pandemic levels, there's not a whole lot of housing out there in the grand scheme of things. If it was me and you look at these statistics, I would probably consider trying to buy using what's called a temporary buy down right now. And if you're going to use a temporary buy down to purchase a home, that means that your interest rate is temporarily less than the market rate. So let me give you an example, right? Let's say you went to purchase a property and the interest rate was 6.5% today. If you did a 3-year temporary buy down, or what some people call a 3-2-1 buy down, in the first year of your mortgage, your interest rate would be 3% less than your 30-year fixed rate. So in essence, your first year payment would be based off of an interest rate of 3.5%. In year two, your interest rate or your payment would be based off an interest rate of 4.5%. Year three, it would be based off of an interest rate of 5.5%. And then years 4 through 30, it goes back to the 6.5%. Now, here's the really, really neat thing about this. You can refinance at any time. Let's say rates get down into the 4s in the middle of that 3-year process, and that's what we hope is going to happen. you can refinance and lock in that lower rate at that time. And any money that's left over from that temporary buy down, you can use, or you will get back, towards a principal reduction. So you don't lose any money. That's the benefit of using a temporary buy down in a declining rate environment that we're expecting. And here's where I'm going to tie this all together. Remember, I said that year over year inventory is up 48% in the state of North Carolina and 59% in the state of Florida. When inventory is higher than it has been in the last 3 years or so, a seller might be willing to give you a credit to pay for that temporary buy down. That way you don't have to pay for it out of pocket as the buyer. So this perfect storm for a home buyer, an educated home buyer, to get into the market. Use strategies like the temporary buy down. Use inventory, the additional inventory, as an advantage to get yourself into a house with a payment where you're comfortable. So that's the number one thing that I'm talking about right now. Get off the sideline, because as soon as rates go down, it's going to be chaos again, and you're going to see a lot of multiple offer situations when that happens, and you might not have the opportunity to buy the property that you want to buy when it does. Secondly, I saw another article, very interesting article, and it was talking about the median age of a first-time home buyer is currently up to 38 years old. The last time we looked at this statistic a couple years ago and we studied it closely, it was at 34 years of age. So people are having to wait longer to purchase their first home because of the inflated cost of housing and the higher interest rates. Now, the repeat home buyers, the median age of a repeat home buyer, the second time they're purchasing, is 61 years of age. That is up from the mid 40s just from a few years ago, also caused by the fact that, people are having a hard time paying mortgages because of the inflated housing prices, coupled with the higher interest rates, higher insurance costs, higher tax costs. So people who are a little bit older are stepping up or stepping down or downsizing into another home because cash is king and they have a lot of it. And that means the overall median age of a home buyer in today's market is 56 years old, which is quite a bit higher than we've seen in recent years. Thought that was very interesting. And I'd love to hear your opinion on that. Another thing that I wanted to talk about is in 2025, next year, we're going to see a really, really awesome change as it relates to appraisals with conventional mortgages. You might have heard of something called an appraisal waiver before, where when you go to buy a property, you don't have to get an appraisal because our automated underwriting system agrees with the value that you're paying for the property. One of the really neat things is that in prior years, in order to use this appraisal waiver, you would have had to put 20% down. Well, starting in 2025, you're going to be able to get an appraisal waiver only putting 10% down, which is awesome. And there's a second type of appraisal waiver, which is, for a lack of better terms, it's called a value acceptance. And the value acceptance means that the system agrees with the fact that what you're paying for the property is correct. However, they would still, Fannie Mae and Freddie Mac are going to want you to get an appraiser to the property, only to look at the property from a condition perspective. So they're not necessarily asking the appraiser to do an evaluation for what the property is worth, but just making sure that there's no red flags to the property from a condition perspective. Is the roof okay? Are there any leaks or fascia damage or termite damage? Is there any safety issues with the property? So those value acceptance with the condition inspection requirement is going down all the way down to 3% down. So if someone's putting 3% down, has a strong credit profile, they may not need an appraisal at all. They'll just need that inspection for condition. Overall, that's going to save homebuyers a lot of money. Appraisals are expensive. They can be anywhere from $500 to $800 in our market. There is a lack of appraisers across the country. So this is big news, huge pickup, going to save a lot of money for consumers. And we're super happy about it. The last thing I wanted to talk about today was we're seeing a lot of people benefiting from refinancing right now and doing cash out refinances. And you might say, well, why would somebody want to do a cash out refinance right now when they're locked into a 3 or 4% interest rate from only a few years ago? And the reason being is that the American household is struggling with debt. Credit card debt is at an all-time high. And that means that people are paying 20 to 30% interest on a revolving credit card debt. So then what they're doing is they're going out and getting an installment loan and trying to consolidate that debt. But your home is your number one asset, right? So just this month, past month, we were able to help a gentleman pay off $104,000 in credit card and personal loans, and we rolled that into his mortgage balance. His household cash flow, the amount of money that he was paying in credit card debt, his credit card payments was $3,100 per month, and his mortgage payment only went up $1,000. So overall, this homeowner is increasing his household cash flow by $2,000, right? So that's a huge win. That's an example of why somebody would want to look at refinancing right now if they are swimming in credit card debt. I also had another homeowner, past client of mine. He had racked up $60,000 approximately in credit card debt. We were able to get him a second mortgage, a closed-in second mortgage, a 30-year fixed second, and he's going to save $1,800 per month by rolling that credit card debt which was at 22 to 28%, into an 8% second mortgage, and he's going to save $1,800 per month. So there's a lot of stuff going on in the housing market right now. Election is right around the corner, and we'll be sure to give you another update once the election occurs, and let you know how interest rates react. Let me know if you have any questions about what we discussed today. A lot of fun opportunities in housing, and we'll see you next time.